Hello, and welcome back to Stock Market Weekly. I am your host, Evan Medeiros, for Friday, May 17th, 2024. We got so much to talk about in this week's episode. Headlines all over the place, from meme stocks to macro inflation to blue chip stocks to currency breakouts to VIX at new lows. We've got everything in between. We got to start it off, though, with meme stocks here back in action. You know, we thought we could just watch Netflix and remember about this time period when GameStop was all over the place and the Robin Hood traders were sticking it to Wall Street. Well, it's back, and we saw a roller coaster moves here, namely in GameStop and AMC, amongst other names. We're going to talk about that. On the macro side, we did get some latest inflation data. CPI number came out for April, and it did cool. It eased a little bit, and the market certainly responded favorable to that. We also had Walmart reporting earnings, and market loving the reaction there. Certainly had, I think, some strong e-commerce growth and some strong high single-digit growth from their storefront. So Walmart firing on all cylinders. VIX hit 4-year lows. So we got an 11 handle on the VIX, if you can believe it or not. Back to 2020 is the last time we've seen the VIX this low. All the while, NVIDIA here takes the main stage next week to report their quarterly earnings. So we're very much going to be looking at that stock and waiting to see what the reaction is there. And in metals here, silver is pushing to 11-year high. So there's a little bit something for everyone this week. Stick around, lots to talk about. All right, we've got some charts in front of us here. TC2000, that is the charting platform we are using, and that is a charting platform that we do support here for traders like yourself. And we have a $25 coupon. I believe it's active right now with a referral link in the description of this video. If you're not a user of TC2000, you want to try them out, take advantage of that introductory coupon right now. Basically gets you a month free. And then check out all the cool things we have built for it on our website, thetraderist.com. and see if it's a good fit for you. So let's get into the numbers here. 1 week return strongly in the green here. Everything was a winner, and the Nasdaq was the leader this week, up 2%. You can see 1 month returns now all kind of firming up here into the high single digits, mid to high single digits. Russell 2000 still actually the leader here in the last 1 month. Now, volatility is the interesting one. That's what we talked about at the top of the show. Look at the VIX here, 11.99. That's such an impressive number, such a low number for this type of environment, for the type of worry and concern about what the Fed is going to do, and inflation and growth slowing. There's so much out there, and the market is just kind of bypassing all of it right now. It's shrugging it off, and it is very, very comfortable here. Nasdaq vol up, or I should say down at 15.83. Now, let's take a look at sectors this week. Technology was the winner. 3% was the relative outperformer, I guess I should say. Real estate was in the second spot, followed by healthcare, rounding out the top three. The only thing that was in the red this week was industrials. XLI was down slightly, but pretty close to flat. Consumer discretionary was up marginally, followed by materials. So a little bit of spread here in favor of technology this week in terms of what's leading the pack. You can see 1 month returns, though, everything firmly green. Utilities really standing out here, up 12% over the past 1 month. Now, if we take a look here at our sector trends, so we started talking about this last week. We started noticing that lots of these sectors here were starting to round out and produce fresh buy signals, fresh green dots printing here. This is our custom smart trend filter indicator. It's built for TC2000. It's also available for TradingView. But it really just helps us measure path of least resistance, where the trend is kind of heading, and kind of cleaning up some noise. It can be used on any time frame. We're looking at it on a daily chart, and you can see all the sectors now are in the green except for XLE. It's the only sector right now that's kind of hanging out in this yellow territory, but everything else has made the upswing, has turned the corner, and is now heading higher. That's encouraging. That's nice to see in terms of market internals. Now, speaking of internals, internals. Let's get a little more specific here. Let's take a look at 52-week highs, 52-week lows. You can see throughout this week, we saw a nice kind of flurry, a surge, a push of new, fresh 52-week highs, particularly on Wednesday of this week. That's when we saw over 1,000 here in terms of at least this measurement. Everyone reports a little bit differently on the specific actual value, but for me, I care about the ratio, and the ratio right now is improving. It's strongly kind of encouraging to the upside here. Remember, we were looking at the end of April, or I should say middle of April, where we started to get this really sort of dry spell of stocks hitting 52-week highs. We started to get an uptick in the stocks hitting 52-week lows. That put us on kind of major alert of just saying, okay, let's pay attention here now for the next directional kind of intermediate term multi-month swing of what this is telling us. And you can see that, you know, we got about basically a week or so of kind of panic, let's call it, even though it was far from panic in terms of pullback percentages. But I think you get the drift, and now we have comfortably kind of moved back into bullish territory. So lots to like here under the hood. The bullish evidence continues to stack up. It doesn't mean we should be complacent, but it just means that we can, you know, objectively see that there is some strength developing underneath the hood. Now, if we move over to Investors Business Daily, shout out to them. I'm actually sponsoring showcasing their swag today, their Market Surge product. But they are a sponsor of the show. They do help make the show possible. This is their IBD 50 list, the top 10. And you can see had a pretty good week this week. CrowdStrike at the top. I'm not actually sure if this is the latest up to date. I may have missed the fresh update over the past few days, but still a good glimpse here at some of the strong stocks on their list that are working, that are producing some solid gains. So get access to this list. We got links in the description of this video. That way you can check out the IBD 50 list anytime you want. Now, let's move on to commodities here. You can see natural gas at the top of the list, up 15% this week. Had a huge week, as natural gas does. You can see it's posting now about 30% over the past month. So nice catch there for anybody who caught it. Silver, the big standout on my radar, up over 11%. And breaking to new multi-year highs, decade highs. So that's impressive there. Bitcoin came roaring back this week as well, up 10%. And copper did not too shabby, up 8% as well. Gold, oil, all positive. Only thing down this week was DBA and the dollar in terms of the markets we're tracking for commodities on that screen. Now, let's take a look at Treasury yields. You can see a pretty favorable week, all things considered. It was a choppy week, but still we're seeing that, you know, Treasury yields did fall this week. They rebounded on Friday, but still fell on the week in aggregate. Nothing too dramatic. So again, jury's still kind of out here as we talked about last week. Look at this 10-year Treasury trend line. See if I can just expand this here. I think this is still the pretty interesting chart to pay attention to here as we kind of come back up and back test this line here. Let's see how this reacts. Let's see if yields just spike back up and really kind of take this market down a notch, or if we roll back over here. That's going to be something that we want to be watching for next week. So let's get into some markets now. Let's get into some price action. Now that we get all that data behind us, S&P 500 all-time highs, 5,300, going out to fresh new highs here. Weekly chart up 4 weeks in a row. Remember, in this not too distant memory here, we had that 3 weeks down. We had about a 5% or so correction in the S&P 500. We have now recovered that and pushed to new highs. So let's go down to a daily chart here. Let's take a look at some of this price action. You can see I believe probably last week, maybe we were talking about some type of lower high, or I'm sorry, higher low getting put in, which didn't happen. I'll delete that. You can see now we've just got kind of our vertical ascent here. We sliced through the highs here on Wednesday of this week. It was a gap and go session and really saw just a lot of strength there. That was following the inflation data. So that was the CPI reading that got us excited and got the market pushing through the March highs. Now we sit around 5,300. We are extended in the short term, right? No doubt about it. We've covered a lot of ground in a short amount of time. So some type of digestion here makes a whole lot of sense to me. I think we have a great reference point to use for kind of that upper level momentum, and that's about 52.65, the prior highs here. If we want to keep maximum sort of bullishness in this market right now with things just firing on all cylinders, I want to see the market stay above 52.65. That's obviously a very demanding level to want us to stay above. But you know, that would be the big level. If we start falling back down into this old range, well, maybe we need to consolidate a little bit more before the market's really ready to put in a protracted sort of extended move to fresh highs. So that's the way I'm looking at things right now. Objectively here, gotta love the price action, gotta love that gap and go Wednesday session. We are again stretched in the short term, so be mindful of your risk. Know your time frame, know how you're allocating risk. But intermediate term, lots to like here for the S&P 500. Let's kick over to the Nasdaq 100. You can see very similar situation. On Wednesday was the big day. Again, that was inflation day. And we got back over that consolidation range, the prior highs, that range we were in for most of March and the beginning of April. Once again here with Qs, I think the thing that's interesting, and really same for the whole market, is NVIDIA. NVIDIA is the elephant in the room, which I believe, I don't know if they're Tuesday or Wednesday. Let me see if I can double check. They are on Wednesday of this week. So certainly going to be very impactful for the Qs and for the S&P 500, for the direction and the tone of the market. I would say rounding out the end of May, it's certainly going to be an interesting one. So we're going to keep an eye on that. But Qs, very similar situation to the S&P 500. Look, if we can stay over, you know, call it 445, 450 area, then you got to really respect and love the price action here for Qs. We're a bit extended in the short term, but lots to like on that intermediate term basis. And the Russell 2000 here is working itself back up into this big old resistance band, which is an important key structural long-term level. Go all the way back to 2021. If you can recall, we went sideways here for about 10 months, a year, basically. And that was the, you know, dip buying extraordinaire spot, was right around this 210, 209 area. That's where dip buyers kept coming in, and it makes sense, right? Price has memory. People that want to sell at break-even prices, or they want to get back to levels that they bought the Russell 2000 in, God forbid, 4 years ago, and they've been, or 3 years ago, and they've been waiting as patient bag holders to get back to even. Well, that's what the market is contending with right here. So it's a big spot for it. It's short-term extended. Let's see how it reacts though throughout the rest of this month. So that's the way the Russell, the major indices look. Let's take a look here at the VIX. This is what is just so impressive to me. I mean, we saw just such a run up here, this fear that came into the market on that 5% correction in the S&P 500. Now, of course, S&P 500, I don't want to sell short. There were definitely some more extended, stocks that getting sold off into the middle of April. But certainly for the S&P 500, it was pretty, mild pullback, dare I say, correction. And we did spike up to about 21 or so, north of 20 in the VIX. And we have really just plummeted off and fallen off a cliff here. And so if we zoom all the way back out, you can see we are getting back towards those 2020 levels before we had that huge 2020 COVID spike. And you can see that the VIX here is very comfortable. Now, of course, the natural reaction when you look at this is just, well, buy volatility, right? This is going to be the easiest mean reversion trade. And you do have to be cautious here, because these are the types of markets that can stay in this lull for a longer period of time. So yes, volatility is naturally a mean reverting asset. And yes, we will eventually get a spike back up. I don't think we're going to live with a 12 VIX or sub 12 VIX for a very extended amount of time. But be cautious here. I would just say, yes, we are short-term extended, and I certainly see that. In fact, a lot of our short-term trading systems right now are picking out shorts in this market, but our longer-term systems are still very much balancing us out net long. So just, again, keep that in mind. The market regime has definitely changed, but let's see how NVIDIA handles all of this fun complacency. So VIX, there it is, sub 12. Let's take a look at We got some individual stocks I want to look at. Let's take a look here at silver. Let's go to silver next. Silver here, really impressive move on Friday, up 6.39%, gap and go session, heavy volume, breaking out, weekly chart. There's just so much to like here. We talked about silver and you know, the breakout when it made it over here at the beginning of April. Then it had a pretty violent, nice shakeout. I mean, this was a 12% 3-week shakeout here for silver, which was no joke. But now it's just right back into full-on momentum mode here, and you're going to go all the way back to 2013 to get to silver prices. You may want to check the actual spot silver prices, not the SLV ETF, but still, nevertheless, some very, very good, encouraging price action here. Commodities have been mostly on fire, gold specifically, or metals, I should say. So it's nice to see silver kind of catching back up. Speaking of other things that are on fire, kind of working to the upside, here is our China trade that we started talking about a few weeks ago. And you can see KWEB this week up 7%, seeing some big winners here. And again, just really have to like kind of this intermediate term potential, or even I would dare I say long-term bottom that is being put in here, or seemingly confirmed for the China trade, FXI. You can go right down the list, depends on what ETF, depends what individual stock you want to basically look at, but lots of disdain for this trade, and maybe for rightful reasons, but it's on a lot of folks, I think, do not touch list. And China is working right now. It continues to work for the 4th week in a row, 3rd week in a row. And again, it is a tougher chase now than it was 2 or 3 weeks ago. So again, you got to be a little bit cautious, because we have covered, you know, 25+% in some of these big ETFs in about 3-4 weeks of trading. So keep that in mind. But these stocks are continuing to set up here and push nicely. Now let's talk about NVIDIA here, because NVIDIA, of course, like we said, is reporting earnings on Wednesday. It's going to dictate a lot of this market action. I know a lot of folks might be tired of looking at this type of stock and AI and all this, but it is important, and is driving a lot of capex and just a lot of the fundamental narrative here in EPS growth across some of the biggest companies. So it is important to track. You can see NVIDIA has made it all the way back up to the top end of its range. Didn't quite break out from the March highs right now. Probably won't until we see what earnings are. So it looks like it's kind of nice and, you know, happy in this range right now. I actually don't know what the implied move is at this point for earnings, but you know, I'm sure it's going to be a blockbuster quarter for NVIDIA. It's just going to depend on guidance and just how much is the market priced in at this point, right? I doubt the numbers are going to disappoint that much. It's really just how much is baked into this stock at this point at, you know, $2.5 trillion market cap. So let's, you know, keep an eye on it here. I think you've got clear levels defined. You got the lows from April, which is down around 750. You got the highs made in March around 964. And if you see NVIDIA gapping up over those March highs, and we start making another continuation pattern here, as exuberant as it looks, it's something that I think you still just have to respect right now, especially for the market time of the year. We're going into summertime trading where volume gets very light, and these things can really just grind and push longer and kind of get into their mind of their own for longer than you know, you can stay solvent, right, as the old saying goes. So be a little bit cautious there. I don't have a position in NVIDIA. I own the Qs, so I guess implicitly I have a large position in NVIDIA, I suppose, but I don't have any of this particular stock outright. So there it is. I'll be watching on Wednesday. Good luck to those involved. So we talked about NVIDIA. Let's talk about Walmart real quick. This was the big move we saw, up 7% on the week. Again, you saw this nice big gap up on Thursday, and this is all-time highs for Walmart, 500 billion plus, and just lots of good growth, or at least growth that's above expectations. And so we're in a nice uptrend here. Good volume coming in, lots to like. Again, just another sector of the market that is working right now. Maybe it's not the best thing that Walmart's, you know, really doing well right now, if depending on what it says about the consumer, but that is another story and something I will not opine on. So that's Walmart. That's NVIDIA. Let's talk about the meme stocks. So here's GameStop. This was the action this week. Looks like a penny stock, the way it traded. But basically, you know, at the start of this week on Monday, we had a 74% session. We had this huge gap up pre-market, and then we got hit with another one. This was up, I think, another 75+% pre-market, and then ended up getting as high as about $62. I think it was trading almost at $70 pre-market. There's a lot of trading pre-market, and this deflated. It's deflated extremely fast. It was down 65% from the highs made on Tuesday. So, you know, I don't have any strong feelings of this or any insight, of course. I don't have any positions. I didn't trade it, but it's certainly interesting. Again, I think I kind of go back to this VIX under 12, summertime trading. This is just where weird things happen, I guess. And it's hard to know whether or not this is truly done. I mean, I think a 65% correction is a good nail in the coffin on most things, but GameStop, look, we've seen it, you know, trade in its own sort of singularity mind. And I would not want to be shorting it, even though as tempting as it looks at times. But this is something where it's driven by flows and market forces that are not, you know, tethered to fundamentals per se. The interesting story here about GameStop is, and AMC. So if we take a look at AMC, I mean, we saw an equally crazy move here. This was up north of 10. So this is like a 300% move this week from low to high, and then a subsequent 60% pullback. So very similar type of price action in both of these. I do believe, if I read correctly, AMC and GME both companies did a tender offering, issued shares, and kind of took advantage of this wild speculation that we saw this week. So be interesting to see, again, this kind of self-fulfilling prophecy that, you know, GME, if they can raise funds or if they can get more capital in liquid here, you know, then the company can start to be more profitable and invest more and do more things with it. So it is kind of interesting here, but more shares coming to market. And of course, you know, Roaring Kitty's Twitter account is just under big question marks of, is it him? Is it someone else? Did he sell his Twitter account? What's going on there? And, you know, what's really happening? So lots of fun, lots of speculation. This is what happens, I think, when, again, VIX goes under 12. You just get weird things to happen. So good luck to those participating. Manage risk, please. And, you know, just be cautious. Markets can certainly do things for a lot longer than seems rational. So that, I think, is pretty much everything I wanted to talk about as I look through my notes. Yeah, that's about it. So plenty going on. Let's see what NVIDIA gives us towards the end of this month. Again, we got not holiday. Well, we do have holiday trading coming up. We got Memorial Day, which sort of officially kicks off summertime. So keep that on the radar. And again, I think there's lots of bullish evidence out there. Short term, maybe a little cautionary, right? To just be mindful of risk. But I think underneath the hood, there's been lots of good developments happening. So hopefully you're doing well out there, had a good trading week, and we're able to kind of keep track of all of this. Don't forget, we've got links in the description of this video for TC2000, for IBD, for our own trading systems, lots of cool stuff. So check it out this weekend. And thank you so much for tuning in. Hope this was helpful. We'll see you back here next Friday. Take care and have a great weekend.